Hey, real estate investors. Today, let's talk about the big topic. Should you buy a property in an LLC or should you buy it in your personal name? Now, we are not attorneys. We are not giving any legal advice here, so please talk to your legal team for whatever situation you have going on right now. But we wanted to kind of give examples of what we've done and kind of why we've done them. And so there's several options that you can go. You can go into the corporation world, but we're not going to touch into that because we're going to touch into the LLC and your personal name, partly because they're the most simple options that you have. And in my opinion, I just love to keep things simple. And when you make things too complicated, then it's just, well, it gets complicated. And so let's talk about these two. The first is in your personal name. Now, I own some in both options here. So I like both options, but there's a reason I do one or the other, and I just want you guys to see why I choose to do one or the other. Now, one of the cool things with your personal name is, well, you can put it in a Fannie Mae loan. So that means you can go to the bank, any lender, you can go to a mortgage broker, you can go to whoever, and get a loan for a 30-year rate lock, and the cash flow, it's locked for 30 years and it's amortized over 30 years. That's a huge plus. You know why that's a huge plus? Your cash flow per month is a lot higher than if you would go to LLC route, because now you have to go to a commercial loan type product. So I do like it for that reason. Now, this would have to be between a 1 and a 4 unit when we're looking at that. So you have to keep that in mind as well. So if you get anything over 5 units or more, now you automatically have to go to an LLC, set up an LLC. You could buy the property in your name still, but you still have to get a commercial loan regardless, because now it's a 5+ unit. The big thing here is liability. Because it's in your name, now you are at risking your personal properties and any other assets you might have as well. So these are definitely things you want to consider, because that does open you up a little bit more on the legal side of things, from my understanding. So again, not legal advice. I'm just saying this is what we've seen in the past here. Now, so let's talk about LLCs. Well, LLCs do give you that a little bit of asset protection. Now, some will maybe set you up in a different way, but a simple LLC, you now have to go into what we call a commercial loan. Well, now if you're in a commercial loan, the best rates you're going to see are maybe 20, 25-year AMs, and they're only locked in for maybe 5, 7, or 10 years max. So you got to keep that in mind. What's my game plan in 5 years? What's my game plan in 10 years, depending on how much of a lock you have into that. But you have to also remember, if you lock it for 5 years, it'll be one rate. If you lock it for 10 years, it's going to be more. Typically about 0.25% for every bump is what we've seen. So at least from the commercial world. So for rough examples, let's just say interest rate is at 7% at a 5-year rate lock. Well, if you go up to 7, it might be 7.25, and if you go up to 10, it might be 7.5, or maybe even 7.75. So just keep that in mind when you're looking at those. So your cash flow immediately is going to be a little bit less, because you only have an AM of 20 or 25 years. And so you also have to deal with local banks and credit unions as well. So instead of dealing with your mortgage brokers, you don't have to deal with Fannie Mae and Freddie Mac. So that's the nice thing about this, is you don't have to deal with Fannie Mae and Freddie Mac on this side. So it makes the loan process extremely easier, because they're looking more at the asset, the property you're buying, more so than maybe the you personally that they would look here, because they're looking at you personally 100%. They want to know every details about you there. Where in here is, they do want the tax returns, they do want that detailed information, but that's not the main focus. Their focus is the asset itself. So which way should you go? And in my personal opinion, it's really, it's which way fits you best. I don't think there's any wrong way in doing this. I think ultimately it's, if your two options are one of these, you're in great position. If you have a third option of whether you do investing or not, do one of these, not the third option. Because investing, the best thing about investing is buying and holding for long term. And so one of the things I kind of say here is, I like this for cash flow purposes. I like this for asset protection. And so what's important to you? Now, I have this one line here, business versus hobby. And what do I mean by that? And that's kind of interesting here, because in your personal name, if you do not own any investments whatsoever, your personal name here is actually a good option for you, because you don't know what it's like. You're not even sure you want to get into investing as a business, or is this just a personal thing to build some assets for you over time, and then you can do whatever you want with that asset? Or are you planning on turning this into a business? And so I personally own some in both. And the reason I chose this way is because of the 30-year rate lock. When interest rates were down at 3-4%, we locked those in because we looked at that as a huge asset for us. We kind of felt like that wasn't going to last forever. As much as we love those rates, we knew that it just couldn't last forever, for eternity. So we ended up locking those rates in for several properties there, which is huge for us now. But here, we also bought some in an LLC the last couple of years as well. And so it just depends what you're looking at. So for us, this is a business. And so we put a lot of assets in a certain LLC to protect our assets from other assets. And so we don't want to expose ourselves to too much legal troubles and getting hit. So we're going to end up just putting some in some LLCs and splitting those up, LLCs. But again, we're running it as a business. So for us, we love real estate. We love doing it. And so we knew we were going to do a business. So we're doing LLCs. But I also don't think, if you don't know what you're doing, keep it simple. Keep it in your personal name. Buy that one property and see if you even like doing real estate investing. It's not for everybody. And one of the beautiful things is, you have that in your name. You have a 30-year rate lock. You can choose to do what you want with that property. In an LLC, you can do the same. However, taxes, you got to be considerate of what some of your yearly expenses are going to be. And what I mean by that is your tax account. If you own a property in your name, it's just going to feed through with the rest of your tax account. So in an LLC, if you're 100% owner of that property, that's just going to feed through your tax account. So, or your tax accountants through their personal name there. So you don't really have any difference there. However, if you're 50-50 with somebody, or 70-30, whatever, if you're partners with somebody else that's not your spouse, then you got to create what they call K1. So now you've just generated more expenses for your company, and so that's the big question in my opinion, is how much money is it going to cost to buy the property in your name? How much money is it going to cost you to buy a property in an LLC? Well, an LLC, you have to pay that K1 if you're partners with somebody, and that's going to cost you what, $1,000, $3,000, depending on who you're using and how much service they're providing for you. But that's an extra $1,000. That's a lot of cash flow that you could potentially be pouring into, especially if you only have one property. And the next thing too is the cost of setting up an LLC. Now you could probably do that under $1,000, and that's not a huge expense there, and that's only one time. But if you're doing your tax bills every year and you're paying $1,000 out for that K1 report for just one property, well, you got to consider that as well. And so if you do your own taxes, that's a moot point. That's not really you have to worry about. But if you're having a tax accountant do your taxes, consider your your yearly expenses when you're looking at different LLCs. If you're 100% owner of that property, it just feeds through, not a big deal. But if you have to create a K1 for that LLC, just keep that in mind. You throw 10 properties in there, or even 5 properties in that LLC, that $1,000 isn't that big of a deal then. But just keep that in mind when you're looking at, should I buy in an LLC over here, or should I buy in a personal name? And kind of pick the one that best fits you. Are you brand new into this and just want to see if it's right for you? Are you looking to get this into a business and run this like a business, and plan on, no matter what happens, growing, scaling, and having a ton of properties? So hopefully this has helped. If you have any more questions about how to do investing, what we would recommend, what we've experienced over the years of doing this, please reach out to the Zimmerman team. We love to help you run deals, analyze deals, and make sure you're not stumbling into something you shouldn't, and hopefully helping you grow your cash flow and, most importantly, your financial freedom.